We are officially in bear market crash territory. Oh yeah, I am using that word to describe the real estate market in terms of pricing with the latest numbers that came out in July, and it is not good. Now I'm gonna go over the data and all the little nuggets I could find outside of the usual headlines we've been getting to give you some context as to what happened and where I think August is gonna go and land as well. Spoiler alert, not well, because on top of the mammoth 4.25% drop in the average price from a month-over-month perspective in July, August tends not to be any better. So stay tuned to find out exactly what the heck is happening. Now, if you're confused as to what to do in this market, that's normal. Real estate isn't always a one direction trade. It doesn't always go up, it usually goes down sometimes too. So it's bi-directional. And this is the time when you actually need solid strategy on how to navigate this market, as things are quite weird. And it's very normal that you have to buy and sell real estate, because as much as people want to time the market, life happens and you need to buy and sell. At the very least, if you're buying and selling the market, it's not doing that much of a difference for you, right? Depending on what you're trying to get into. So if you're looking to book a strategy call to get some solid advice about what to do, you can use the link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a RE/MAX brokerage in the Greater Toronto Area, in addition to making awesome educational real estate content like this for you. And as you can tell, I swapped the episode order around this week since the Market Watch numbers from Treb literally came out the minute I released my last video. So if you're looking for my headline reaction video, that's coming this Thursday, so in 2 days. And another thing I like to point out is that every time the monthly Market Watch data comes out, as of late, call it maybe the last few months since prices were changing a lot, I put together this giant change in price of asset types such as detached semis, towns, and condos in each city that specifies into Vaughan, Milton, Brampton, Ajax, whatever, right? And you can see what's there. And I'm not gonna be talking about it in this episode because there's just too much stuff that I jam-packed, but you can download that updated chart from the latest numbers in the link description below if you're curious about kind of where your property is and what it's going to go over. Obviously, it's very generalized, but I'm just not going to be able to go into the micro market data for you in this video. As like I was saying earlier, it's really, really jam-packed. So feel free to get that data for free. It's just click in the link description below, enter your email, and I'll send it off to you right away. All right, let's kick this bad boy off with the numbers. And it is not going to be good. So right here, average price is about $1,075,000, down about 6.25% on a month-to-month basis, which is absolutely wild. The months of inventory is technically creeping up to a balanced market, but it most definitely feels like a buyer's market right now if you're transacting right now. Then we have the amount of sales. So the number of transactions at a silly low amount of 4,900, give or take. And now you are correct in seeing that the detached homes over here, Toronto area, is down 30%. It's a huge number. Same with the condos in the 905 area. And I'll address more about this later on, probably on Thursday's episode, because the sample size is quite small and continually seeing this price is going to kind of be weird. But I wouldn't be surprised if August gets that numbers, because August tends to be not that great. But more on that next episode. But let's digest the prices first. Yes, prices are down 6.25% from everything you've seen, but that's not the news I want to tell you. And I've always personally liked using month-over-month data in a rapidly changing market as indicators, because it is better because it's faster moving of how the market is. But the news is we must look at the year-over-year prices. Have a look at the chart over here. You can see where the orange line and the blue line are kind of touching. That means the current 2022 prices are back down to July 2021 prices. So from a technical perspective, one could argue prices are still up 1.2% from last year. Sure, but prices are essentially the same by 12,000, give or take, based on that number. If you look at the July 2021 number that I highlighted over here. And like I was saying at the start of the video, August has more downside to go, given that seasonally speaking, it always goes down month to month. So you can probably expect headlines of GTA average prices being negative year over year when August numbers comes out in September. And that is the big headline. It means that prices went up, went down, and we're back to where we were. Wild. And you can see that in April 2020, the pandemic number, I highlighted, that's going to be important later. But here's another chart to illustrate the price fluctuation for you. Now, rather than doing kind of like per year, I just put this in a linear fashion like this for you. And you see that those two red boxes where the blue lines are the same, that's the 1 year journey we had. We went up basically about 19.5% in the GTA from peak to trough. Yes, technically textbook crash is 20%, but come on, man, like 19.47% is so close. So let's just call it 20%, right? You round the 7 up, and the 7 rounds the 4 up to a 5, and you round the 5 up to the 19 becomes a 20, right? There you go, right? Crash, 20%. Essentially, since I'm just saying that, we'll see some more red in August. So a real estate pricing crash is most definitely official by textbooks standard, just like the recession. And just like what we had in 2017, although 2017 we hit the 20% drop much faster. Now, the interesting thing you'll be wondering is if the prices were to revert back to pre-pandemic levels, you can see which is the yellow highlighted box I put it here. And that's the delta of about 250,000 in average price, or about 24%. Let me know in the comment section below if you think we're going to give back all the pandemic gains and the reason why you think so. And I'll give you my answer a little bit later. Now, next, let's talk about the sales. As a lot of people have been asking me to compare kind of the 90s to the current market right now, because everyone's talking about the 90s and the crazy 10-year crash. I took all the available TREB data all the way back to 1996, where I manually select them all, and to give you a history of the sales in July. You can see that little dinky little thing on the bar graph on the right. That's 2022. The orange line across is the average in the last 26 years. And no matter how you slice it, the transaction volume is really bad. We're about 40% below whatever norm you want to use. It's wild. Now, if you look at this chart where I ranked the data, you can see that the only few times we had less sales in July 2020 were the years before 2002. Meaning, we are at a 20-year low in sales in July. Ta-da! To put that into context for you, let me show you a couple of things, or talk about things. You have to realize that we've had tons of immigrations in the last 20 years. We built tons of homes that have changed hands. And to even date this back in July 2002, the average price in GTA was about $275,000. Yeah, right? You could still buy a detached home in Toronto for less than 400 grand. And at the time, I remember they were announcing pre-construction homes in South Unionville, Markham. Yes, that's how much time has elapsed since we've had this little sales in July. So to say it's bad is really understating. It's like poo-poo. Now, if you found this content useful, it means other people will as well. So make sure you smash that like button and share this with other people you know. And while you're at it, just, subscribe, because you'll know that when I drop sick, awesome content, sick real estate content just like this in the future. Now, the nerd in me can see all that analytics, as you can tell. So I can see those of you who aren't subscribed. So please do, as we're trying to hit the 10,000 subscriber point. Now, for the 10,000 subscriber bonus, I'll make a frequently asked questions video where I answer any questions you may have on air in YouTube. So whether it be about yourself, about me, whatever, you can leave them in the comment section below, or send your questions to the email right here. I am looking forward to that one. Now, let's look at the active listings. Remember, this is the number of listings for sale at the end of the month. And you can see that in this chart over here. The 26-year average, because remember, I went all the way back to 1996 now, in the Greater Toronto area, it was about 15,000. And here's the funny thing that some, may give you a little bit of light at the end of the tunnel about when prices will stop falling. We actually had fewer active listings in July than we did last month in June. By about 700, give or take, right? So there's 700, less listings to buy at the end of July than June. And there were truly no buyers for this market, and the market is dead. We shouldn't be seeing a decrease in active listings. Now, arguably, most people don't list in the summertime, and a lot of sellers, they don't have to sell. They won't sell given how soft the market is. So that is the other, flip side of the coin, which could mean we could see a very large surge in listings in the first week of September, much more than we normally do anyways, because we do get a lot after Labor Day. Now, more on kind of my prediction in September a little bit later, but just stay tuned. So if active listings are coming down, I kind of wanted to show you and dig deeper in this, because sometimes it makes sense, right? So we look at new listings, and this is the amount of listings that came out to market. So you can see in this chart over here that we're well above the 26-year average. Now, one would think, oh, poo-poo, sellers are getting crushed by interest rates and have to sell. So we're seeing a surge in new listings. While that makes sense, let me guide you through some context. Again, a little bit of more my critical thinking and give you a little bit of nugget bombs of information. Whatever fun uses this, because this is why you're here, right? To get sick analysis of the market. Anyways, jokes aside, here's a chart showing you the number of new listings that we get on a month-to-month basis in the last 4 years. So these are the little charts, and everything at the bottom of the line are the months, right? You can see the only thing that's kind of the outlier is the gray line, which is the 2020 year, because, pandemic. And things are actually quite normal right now, right? So nothing is shocking. You can see that, we usually get a peak of new listings come March because spring market, normal. And then we see a dip down in summer, which is normal. And then we see a little minor increase in September, which is normal. Then we trail off for the year. Saw this in 2021, saw this in 2019. Obviously remove 2020 in the gray because it's weird. But just trust me, it looks like that in the last 10 years. I just don't want to put so many lines to confuse you. And here is a chart where I zoom in on just the first 7 months of those years. And you can see that 2022 follows 2021 super, super closely. But it was a very hot market in 2021. So I had to ask the question, why is that? Right? We should be seeing a lot of listings if people are desperate to sell. So I turned to listing terminations to see some of these numbers and if they're messed up because I had a hunch. Now we have a look at chart over here. You can see that the number of listing terminations are rapidly increasing from January to June in 2022 as the market got softer and softer, after February, which I would say is the peak. You might be wondering, what does this mean? Well, a lot of realtors try to put up a super attractive price, example, let's call it $999 for a home realistically that was sold for like $1.5 million in, back in February, and it would sell and maybe even get higher than that price. Well, when the sellers don't get their number, they're looking to terminate that $999 listing and they relist for what they actually want. That relist is actually considered a new listing. See, we start seeing more and more of this in March, April, May, and June because people aren't getting their prices as the market was coming down. So that's why the terminations are so high. That, and also realtors, just please learn to use the price reduction function. Everyone already sees the relisting anyways. Yeah. Anyways, obviously as a person of science and empirical data, I had to take a control sample. And when I did, what I compared it was to 2021 and 2022. And we're still very, very, very elevated in the number of terminations. You can see over there. So obviously the nerd in me kind of mapped this out and assumed all the terminations are most likely going to be relisted, meaning that the amount of new listings get double counted. So I removed them and I plotted in my chart to kind of deduct what the new listings with the terminations out of the picture be. And you get this chart right here for the last 3 years. We're at a stupid, silly low amount of listings in the Greater Toronto area. Less than 6,000 homes are for sale. Now look, I'm not sugarcoating this for you. I'm not trying to spin this in my way, but I'm just telling you, this is not a sign that the market is rebounding, but it's laying the groundwork for potentially a stabilization in the market because there's so little stuff to buy. And now here's some anecdotal evidence I can share with you. Boots on the ground. We've had some listings and I've talked to a lot of other realtors and friends in the industry who, I trust, and they also have seen a showing pickup in August. Super weird, right? It's August. Furthermore, a trend I'm seeing is sellers are now dropping their price to something super low and holding offers. Again, here's the weird kicker. Not in a manner kind of like in February where they're like, hey, we're expecting a crazy silly amount like we did in February, but it's kind of saying, hey, got to sell this property. Come at me with your best offer. And those properties are actually selling if they are, in decent shape. I'll bet not obviously the February numbers, but the buyers that are coming out to see these places and the buyers that are putting offers and know I'm seeing, it means that they're considering it. Now, there's lots of showings on these properties and multiple offers still happening for those who kind of dropped their price. We even had one listing where it had 80 showings last month because we dropped the price. Then you also have this house over here. You can check on Richmond Hill that actually had 16 offers. Now, it was priced low, but it wasn't priced stupid low. It was listed for I think a little bit less than a mil, like I was showing you an example. And it sold for 1.28 mil, give or take. And again, these are one-off anecdotal evidence, but it's to say that what I'm seeing boots on the ground right now to give you an idea of some of the things that are moving that you may not see in the stats. And what I'm trying to say is this. The buyers are out there. Just the price has to be good enough for them to want to put in an offer in this world of uncertainty with the interest rates and the mortgage rates that they're dealing with right now. So there is probably a price floor being set right now at some way, shape, or form. When? We'll see. So do I think personally we're going to go back to pre-pandemic levels in terms of pricing? Probably only if we continue seeing interest rates climb to 6%, and everyone's got a different spin on that, right? This is why September, and I've been saying this to a lot of people, is going to be very, 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 very important and a big telling sign of where the market is trending. We're either going to see stabilization, not prices up, stabilization, or we continue going down. So let me give you the bull and bear case for both. Here's the bear case first, right? So the Bank of Canada could increase interest rates 75 basis points on September 7th, which is, again, expected. The US inflation, CPI, and Canada is much higher than what they thought in August, and the expectations are to increase it some more. Plus, we get a ton of listings to market come September from those who decide to try selling in the fall, and it's probably a better idea. And potentially a lot of trigger rate related sales, video up here, as debt servicing goes up and the amount of new listing relative to the amount of buyers that are hanging around is much higher. Therefore, our months of inventory is going to continue going upwards, and we'll probably see pressure on prices coming down because there's too much stuff to buy, not enough buyers. And then the nail in the coffin in all of this is probably like, I don't know, the rates will go up in October and go bam, because inflation is still hot and not transitory. That is a bad case. Prices continue going down. Now, the flip side is the bull case, or not really bull, but like to call it the neutral case, right? September 7th comes around, we actually get acclimatized to the fact that we're going to get a rate hike because, everyone's expecting it, everyone's talking about it. And the trigger rate doesn't push as many listings as most would think into the real estate market because the Canadian household balance sheet is still strong because unemployment is still very, very high. Sorry, not unemployment. Employment is very high. Unemployment is very low. And therefore, there's wage increase due to the shortage of labor and there's pressure on that. Inflation continues to trend downward from a base effect because last year was very high. And, from a perspective of the central banks, they can start talking about holding off on, increasing interest rates. And the 5-year bond continues to take a pooper because they already lost 100 bips from the last month. Now, both cases are very, very real possibilities. And you know what? Only time will tell. Nobody has the answer. There's too many uncertainties, right? And as you can tell, I can make a very strong case for both if I wanted to. But let me leave you with this final thought if you made it this far in the video, because I know this is a long one. Did you know in the last 26 years in history of the Greater Toronto Area, the numbers that we get on a month-to-month basis from August to September have only been negative once, and that was in 2001. Have a look at that chart. Shocking, right? It's all green except for one, which is 2001. Now, I've talked about seasonal trends before, and the August to September kind of resale price and volume uptick is serious. It's real. The average increase from August to September is 3.95% in the last 26 years. Just like that sink in. 4% change. No other month-over-month change is like this, or there's enough correlation to even be that adamant. So, are we going to be the second time this year where this trend bucks, where prices aren't green because of high inflation and rates? Or are we going to see the bottom of pricing come August and then we trend up at the end of September? Only time will tell. Now, if you're wondering what I'm thinking on this, I'll tell you, but just so you're clear. I'm still waiting for some data input coming in for me in the oncoming weeks. But initially, I think prices will go up from August to September. So you'll see it in the data come early October. So whenever Trev releases it, but we'll see October numbers back down month to month come November. Again, there's so much that can change from now and then. So don't use this for a way to navigate the market. Just call me instead so we can see what your personal situation is. It's important that when you get new input, you have new output changes as well. So you're not stuck to something, right? Because things change. So yes, this market is sometimes hard to understand, and hopefully you got a better understanding of it if you made it this far in this video. Good God, I think it's 20 minutes. But now, if you're looking to optimize on how you can sell your property for maximum price in upcoming months, if you believe that we'll probably see an uptick in September, you can book a strategy call with me using the link that's on the screen. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.